And boy, do we have a special guest. My friend Hither Mann is welcome to the show, Hither.
Thank you so much, Darius. Really keen to do this. I have been looking forward to it for a while, so thanks.
Yes, myself is included. Guys, for those of you that are new to the show, you will not know this, but we are all about two things. We're all about people who are living their passions and those that are creating greatness in the world. And my friend Hither is creating both lots of greatness and living with lots of passion. With that said, guys, we're going to jump right in the show. I want to give you guys some background. I met Hither probably about 3 months ago, almost 4 months ago, right when Clubhouse was blowing up. We were in all these different rooms, and I heard Hither talking, and I'm like, man, who's this person talking about this high-level mindset stuff? I want to meet her. So I hit her up, and she responded very graciously. And yeah, I've been so happy to connect with you and get you on the show to talk to you all about all the cool things you're doing. Do you mind if I give a little bit of background to our audience on yourself?
Please, thank you. That'd be
awesome.
Great.
Well, so you guys, Hither is a peak performance coach for Credit Suisse Private Bank, and she's also known as the Millionaire Mentor by MONACO-based high net worth magazine. She has set up the world's first female-only asset management fund and is actively buying companies in healthcare, construction, and legal industries internationally that she'd like to take IPO onto the global markets. She's the first female currency trader and educator, so we'll be going into that. And she runs the Fortune Academy, which is empowering the underdog entrepreneur to create massive wealth. And I'm so excited to talk about all things that you're doing. Man, you got your hands full.
I know, but you know what? I think I'm just one of those people. I like these projects. There are lots of things I've said no to, believe it or not, but I love everything I'm doing. So I'm okay for now.
I just realized my mic was not even near me.
Well, I could hear you perfect. So
no, I speak loudly, so that's good. Let me make sure I got the right mic on because I want to make sure the sound's good here. So do me a favor, how did you get into all this stuff? I don't know if you know this about me, but I have actually a deep financial background. So yeah. So I ran I guess we're the 40th largest mortgage lending and servicing company in the United States. That business now manages about $80 billion worth of mortgages. We grew it from the ground up. So for me, I've spent 20 years in the markets, mostly on the debt side, mostly on the mortgage-backed securitization side. But I'm pretty I have a deep interest in finance, so I love a lot of the stuff you're doing. And I actually have prior to that, I was a trader, so I did proprietary equity trading.
Wow.
I was really bad at it, so I'm not a good trader.
I can make anyone a better trader, and usually the best they'll ever be, because it's all about that risk management mindset a lot more than you think. But yeah, we can talk about that in a moment if we.
Yeah. So, but I want to hear. I always like to hear people's origin stories. So how did you? Where'd you grow up, and how did you get into what you're into?
Okay, so I came from very humble backgrounds, no real big money in the family. It was just usually that was my void. So that was what drove my highest value. I wanted to be super wealthy from the age of 9. I knew I had to be wealthy. I didn't give myself a choice because my parents used to argue about money so much. I had the typical immigrant story. I grew up in Kenya, which was a British colony, so a very, ex-British colony. I moved to UK because you're born with British passports. And it was a typical immigrant story. So you come there for a better life, etc. My parents worked very hard to get by, and I felt the pressure on me because my dad used to say, "You are the son I never had." So he kind of put a little seed in my head saying, "Okay, well, I can't be like this little princess female. I have to be like this crazy, let's get out there and do what the big boys are doing." And because I only had male role models growing up. Mm-hmm. So long story short, I wanted to be wealthy and in business. I was very good at academics because my dad said, if you want to be wealthy, education is the way forward. Obviously, he didn't know that you actually make money in other ways in life, but I thought that was true. It wasn't completely. I did a medical degree at university, realized very quickly that this is not going to make me filthy rich. It's going to make me satisfied for a short period, but then mentally I was not stimulated after the same monotony of, hey, I'm a medical professional, and then you literally are doing the same thing with every patient. I got into property 2004. So my first wave of wealth came from going to a networking event, learning from real life business mentors, like real people that had no particular education background. They were just really hardcore business people, knew how to put a deal together, knew how to make numbers stack. I learned from the rock bottom, and I was very good at sales. I was very good at negotiating a deal. I think I was good at that from the age of 16, when I used to do the cold, like every 16-year-old probably had some weird job where you have to do some most high rejection type of job where you're like selling stuff on the street. I did that stuff. So I got past the barrier of no's and people don't like you, but I realized that it's just they don't like the thing that I'm probably trying to sell.
Right.
Me. And that was the first insight of, look, don't take it personally. And I think that was really important because people are scared of how others perceive them in a business scenario if they're going to negotiate a deal. And they normally take themselves out of the game before they start based on, I don't want to cut that deal too short. Like, I don't want to make such a low offer because they might think I'm a fool or they might just hate me. And I had got past that a long time ago. So I was really good at property. I made really good money because I bought houses so cheap. I negotiated them cheap from, the people going through divorce, bankruptcy, probate. Well, obviously you're unfortunately not alive when you're going through probate, but
right.
just like the deals that had equity in them, but there was room for negotiation because the other party wanted to get rid of the house.
Right.
So it's a win-win for both. So I love creating a win-win deal. The other person was happy because they never got bankrupt. I stopped the bankruptcy. I gave them like a payout. I said, hey, buy another house or rent this one back. At that time, before 08, it was really fun. After 08, I actually survived very well because all my houses were really low price entry. So even with the negative equity, as in people were negative in the house peaked and then dropped, I was still positive equity, even in the worst moment. And I was positive cash flow because I figured out how to make the numbers stack. Plus, number 3, I didn't spend all my cash. I've never been someone who would spend everything and live this over the top crazy lifestyle. Even now, I'd spend probably less than 5% of my liquid cash ever in a year. I just don't know what to do. Like, I'd rather make investments and build businesses and build something meaningful. And that's what brought me into the world of financial markets by accident. My mortgage broker actually got into it because he was needing that extra income, and he tried it. And I thought it would be easy. It was very difficult. I tried online, like all the free stuff, and shocking, lost a lot of money. And long story short, I found a trader in London, a hedge fund trader. I piggy banked on the back of that knowledge, gave them a load of money from my property group, and leveraged off that knowledge. For 3 years, I was just focused on learning. I was making money from day one, but I don't think any financial trader can say they know what they're doing until they give it 3 years. 3 years of consistency. Mm-hmm. Then you've got this because you're dealing with different, every quarter in the economic year is different. And if you've lived through things like COVID, which I've done very well, and also 2015, which is a big year for the currency market. It was a big Swiss franc, and the euro Swiss franc was huge. So many people got shaken out of the game. I've lived through so many interesting periods in the financial market. And the reason I've survived is because I've never been hasty with, I've had a liquidity availability at all times. Mm-hmm. And I've had enough backup assets. And I've always been really good at building assets and liquid cash and constantly outperforming the banks and outperforming, I don't know, maybe I'm not as risky as some people for sure, but I've survived a lot. And now the natural progression after being part of a hedge fund or working in that industry is you build lots of billionaire contacts and you think, how the hell did you become a billionaire? Because I'm thinking, well, what's next, and they did it through company acquisitions, through making really big changes in the world. And that's what's taken me to the whole ESG route, which is if you really want to, make a difference in this world, now I'm looking at buying companies that are actually in the, just a slight correction to what you said in my intro. You were right about everything. However, I'm steering more towards just green energy. So completely.
Oh, got it. Okay, so you're doing the green energy. So
biotech or like anything health-based, which is still for future thinking. So like vaccine testing, etc. Something that will really make an impact in the future of the planet.
Very cool. So let me. I want to back up. So your family immigrated, you said, from Kenya to the UK. Is that correct?
Yeah.
Are they originally from Kenya?
So we're Indian background, and India was obviously in the British colony empire. So
Right.
there's a lot of Indians that travel to Kenya and God knows where, but they went with the British Army into Kenya like 3 generations before me. So I have no family in India. They're all in Africa, and then dispersed to now everywhere in the world, like Australia, America, UK. That's how we've moved. Thanks to the British Empire.
Yeah, I have a good friend. Her family, her family is East Indian, but she by way of Kenya, and then she ended up in the UK. She got a medical. You like have the same path as her, that she became a doctor in the UK.
Yeah, and the reason that happens is most immigrant families are scared that we won't get the job opportunities. Like, my parents certainly felt that prejudice against them. They couldn't just rock up at some job and just get the job. They knew that there was always a systemic racism built into British society at the time. So they gave us the safe option. If you want to make guaranteed wealth, be in a professional career. So that's probably why most of them have picked that career. I know for a fact I didn't choose it by choice.
Were you? Yeah. Well, it's funny. Like, I'm half Middle Eastern, so Middle Eastern culture, it's like you got to be a lawyer or a doctor, right? And to your point, because it's like, well, first of all, I think socially, it's seen as something that elevates you, right? Yeah. And then secondly, to your point, there's a certainty around it from an economic standpoint. My dad was an entrepreneur, so for me, I was like, oh, I'm gonna go be an entrepreneur. That was a natural progression. So, one of the things that I was drawn to wanting to interview you was, that you were doing work around mindset. And so is that from the medical side, or is that just something you studied on your own and then that you ended up getting into? To walk us through that.
So you'll be surprised, it started much earlier. As in, I can remember from the age of 6 having like this deep concern for why people are so unhappy. Like, I'm talking about, why is my mom and these women and men around me, they don't look happy. Like, I was one of those weird, strange, probably slightly wired with crazy intuition and naturally anxious. So I used to get upset very easily or disheartened with the world and think, well, I don't think this culture has got it right. I kind of challenge religion in every aspect. I studied theology, and from a very young age, I was the why annoying kid. Like, why do you have to follow this? So parents used to get annoyed with me. I'm like, well, why do you have to do this? And they're like, just because, their answer was like, just because everybody else does it. And I was not someone who was going to listen to that, because I felt this deep sadness behind, well, my mom clearly doesn't like this culture. She didn't want to be a housewife for 14 years. I could tell. She was always unhappy. She was constantly like trapped in a life she hated. She came from London, got married, went to Kenya, where my dad's brother was doing this business. And so she got married off because that's just what you did. And she didn't want to be a housewife. She wanted to be this career woman. So I could see a lot of systemic cultural issues I hated growing up. So my obsession with why was from a very young age, and it stayed with me. So I was very unhappy with the forced choices I was being thrown to. So you have to do this. You have to, ideally, they would have wanted me married at a very young age and 5 or 10 kids, so not that many, but serious, like before 30, there was these milestones. And I think it's in every strong culture. There is always like a milestone of you have to achieve this by this age.
Right.
And that always made me feel very conflicted. So I had internal conflict for a long time. For all my 20s was very like full of turmoil. Mid-20s, I remember having lots of money through property and thinking, well, I'm not happy. There's something missing. So I had like tons of neuroscience studying. And because of the medical career, yes, I had a head start on neurology and I understand the brain, etc. I didn't realize how fascinating the wiring process and how we can change the way we think. So I became obsessed, really in a mission to fix myself. And in the process, more I learned about how I can change. And suddenly the world around me changed much faster. The family treated me different, and I've mended relationships that I thought I could never, ever mend. And sometimes I was so, full of guilt for, oh my God, I've just disrespected that whole culture, but I'm okay with that now, So
Right.
Before, in your 20s, you're just in this weird tandem phase where you don't know where you're going. And And yeah, long story short, I found it was the biggest breakthrough, and that's what drove me to being a life coach initially. That was my initial thought process. I want to help somebody else get out of that darkness that I used to be in. You know, money itself is not going to help. It's if you've got a ton of money, you just have a lot more power. But if you're unhappy, that power might drive you to, you know, suicidal thoughts and actually act on them, or drugs and alcohol, like drugs, alcohol, women, or whatever, men from women, I suppose. But it drives you to do some crazy things if you haven't got that internal, you know, in a peace, or like the alignment of your spiritual, everything, mental, physical. So it became a personal like journey, which now I've mastered so much, and I love it, and I never stop learning. It became very easy actually to help somebody else, because you are the biggest obstacle. If you can really figure yourself out, then the other person in front of you is the easiest thing in the world, because everyone can, you know, everyone's had a friend come up to them and you've given them relationship advice or life advice, and you think, I should listen to my own advice, you know. And
that's my. I said I love saying that. I'm like I need to literally do everything I just told that person to do.
Yeah, and the moment that changes is when you have done that. You know, let's imagine, like in my early 20s, I was thinking I'm pretty good at giving this advice to people, but look, I'm in a shit relationship or whatever, and then at that moment, when there's a turning point in life where you actually are the full embodiment of everything that you ever advise someone else to do on a personal level, that's when you know you have mastered it on the self. The self-mastery is the hardest bit. And then coaching others becomes easier and easier and easier, because it's just so much easier when you're not entangled emotionally with the drama, because the other person is going through it. And you can just be very strategic, just like business, I suppose. It becomes very analytical. But I love it. You know, it's like, it's the first place I look for when I'm doing business with someone. I spend time with them, talking to them, and believe it or not, I don't say that much in that period. You know, there'll be like a 45-minute. I know I'm talking a lot now, and I appreciate you letting me do this. But
no, it's cool.
In a big, let's say we were on a business deal, I would let you talk for the majority of it, because I want to learn about you, and I would want to know how you say things, what you say, what you don't say, you know, and that will teach me so much about your wiring, your thinking, and your values. And so I will know, you know, like how to navigate the business deal from there on.
Yeah, so you're touching on a couple things that I know. We may or may not know this about me. So I wrote a book called The Core Value Equation, which is all about utilizing core values. Yeah, it was a best-selling book that I published in September, and that's
I'm going to buy it.
Yeah, you got check it out. I'll get it.
Yeah. Core, as in, like, tell me the name, because I love buying books. Core.
It's called The Core Value Equation.
Oh, I love it. I'm going to buy that. Thank you.
Yeah, so it's my tool of choice on both self mastery and also business mastery, which is how do you get people to show up with the alignment around values. You can create scale in a business. I call it my belief is that core values are the language of accountability. So when you're talking about meeting folks or doing business with folks, or even this idea of self mastery, getting clear on your values, and then to your point, actually doing what you give advice for others to do. Because it's easy to tell someone to do something based off of a great set of values or a great strategy. It's hard to then hold yourself accountable to doing that consistently, because we are creatures of habit, and maybe our habits don't align to that, right?
Yeah, and as soon as we lead by example, it's a game changer. Then you can really, help elevate others. But until then, you're not really leading, and you're not sufficient enough to be a leader to others.
So for you, and what's funny is I just had a memory. Someone hit me up about a month or two ago, like when we were first going to do our show. Sunil Godse, you did his show, Intuitionology, I think, or something.
Yes, I remember him. Yes, he had some great questions on intuition. Yeah.
So I did his show too. So I was a guest on his show, but yeah, it was funny. You reminded me of him because you said something about intuition. So obviously you're a person that's very introspective, right? And I can appreciate that. And you sound like a very curious person as well, which I can appreciate as well. It's my number 4 core values, curiosity. So I'm curious, you get into, the game of real estate. You start doing, essentially trades on housing, and then you take some of those winnings and you say, I'm going to go into the Forex trading space. When you went and started getting mentored by the hedge fund person who you were working with, how did you take these applications from your business and life and mindset and then start applying them to trading? Because I will tell you, for me, like, I'm almost always right on my trades, but I always get shaken out of them, or I get emotional about them. It's actually why I don't like trading, because there's too many what do you call it, dopamine hits. And for me, I'm a high sensing. Are you familiar with high sensing, like neurology?
Yeah.
So I'm a high sensing neurology. So for me, it's like kind of torture, because I'm living the high and the low too much. Like, I don't even want to. So I do a lot of investing, but it's stuff that, like, outside of the screen. Private equity, I don't know what the value is. I just know that fundamentally it's a good trade, and over 5 years it'll work out. How do you, like, you're on the other side of the fence. You're trading something, from what I understand, currency markets trade 24 hours a day, 22 hours a day. Is that correct?
24 5 days a week. Yeah.
All right. So you're in a market that trades 24 hours a day, 5 days a week. So you get weekends to, like, not think about your trades. But you literally, when you go to bed, if you're in your trades, they're still doing what they're doing. For me, and I've been in, like, my business was based off the 10-year treasury, which trades 22 hours a day. And I learned the hard way when I started having to track that. I'm like, oh my God, I didn't know that, it drove me crazy. I was like, screw this, I'm out. And I wasn't even trading it. I just had a big basket of assets that were tied to it. So for me, it was affecting my business. Like, for you, how do you do that? Like, how do you become, I call it being cool as a cucumber. How are you so cool and collected that you can manage being a good trader?
It's amazing. And thank you so much. I mean, this is why people pay me so much money when it comes to trading, mentoring. And I do this even for, like, the Credit Suisse guys. Like, just their mindset is everything. So trading is such a spiritual game, right? Money is a spiritual game. I fully 100% believe it. So if people want to be obsessed with money, unless they've got a spiritual alignment in life, they're not going to get it. You ask any billionaire, they usually are so aligned and focused and obsessed with their goal that they're spiritually aligned with it. So the first thing about trading, and I've made all the mistakes. So to answer your first part of the question, which is how did I bring the property side to, I'll be honest, I was quite an amateur when I started in property. So if I came in with the same mindset to trading, it was rubbish. In fact, I lost 200 grand in 2 days, probably in a period of 8 or 9 months. When I was trying it alone and thinking I knew everything, I lost probably £500,000 in a 8-9 month period before I got a mentor, and I got to a breaking point, because you're right. There are dopamine hits, and the neuroscience behind losing money is the same as death, the same neurological process as someone who you love died. So that's why suicides in banking is such a big thing, and people lose money and they commit suicide. It's a common and very sad phenomenon, but it happens, and I can see why, because we attach money to our self-esteem, to our self-worth. Like, everything becomes, if I've got money, I'm great. That's what people think for a long time. And it's our biggest reward and it's a measure of success. So it's not by surprise that people are so entangled with it. So the first thing I had to do is realize that neuroscience and realize, right, we've got a bigger beast here than we ever realized. So the other thing, the second phase, is now realize the reason why trading is so difficult, exactly what you said. It's constantly volatile. There's a volatility measure there. We're not even talking about crypto markets. That's 10 million times more. Yeah. But there are still ways to deal with it. And I'm never trading leveraged crypto. I invest in crypto and I can handle the ups and downs. But what you've got to understand is, when you are looking, like I'm looking at my financial screen, my markets, the reason why it's such a raw relationship with your ego is because there's nothing in between. So when you're doing a private equity deal, like even property is technically private equity, you're buying it, you're putting your money into an asset, which is an asset class, which you get obsessed with the negotiation, with the deal making, you forget about the actual money transaction. That's just a byproduct. In trading, there is no in between. It's you plus a button plus your results are bang straight in front of you, and it will bring out the demons. So how you get past that is you have to go deep into your subconscious and ask yourself, what does the whole world mean to you? Like, we go down to, I ask everyone if they want to do this to a high level, I need to know, what was your mom like, your dad like, your parenting like, your culture, who had the money? Like, what did people say about money when you were growing up? It becomes your relationship with money is a financial blueprint on its own, on a subconscious level.
Sure.
So and take it from me, I've seen wealthy kids, like I live in Monaco, south of France, and I'm around some wealthy kids. They have no fear of money because they never had to make it and they never think they're going to lose it. Whereas you go back to someone like me and their background, all you hear is money is like the biggest thing. And you have to, so the fear is much bigger for someone from my background versus someone like them. They're the ones who are frivolous with it and they don't give a damn,
Well, do you think that having that fearlessness around money, because A, you've always had it, and B, you didn't have to earn it, and C, you think there's probably a financial backstop where it's like, I'll just go get more of it because there's this endless well of money that my great grandfather created that I just get. Now, I know there's a lot of data around those folks losing all the money too, right? The generational wealth usually gets lost by that generation because they have no skill sets around wealth creation. But when you look to your point, and I actually come from a very similar background to you, where there was lots of fear around money, and my family grinded hard to make it, but there's definitely a scarcity mentality that I've been kind of struggling with as an adult. Well, how do you, when someone's trading and has a scarcity, background, how do you help them overcome that?
Okay, so you cannot win this trading game with that scarcity mindset. That's
right.
So how you get past that is once you've done that once you've figured out what it is where this has come from, then we go through a quantum physics route whereby we actually have to be grateful for that process and realign it with something else. So I actually help people program and reprogram their subconscious. So immersive changes are very necessary. For me, for example, moving out of my environment, if I was still living in the UK environment that I moved to as an immigrant family, no way would I be thinking this big. I'd be scared. I'd be thinking I wouldn't be making money for very long in my life. It would constantly be going up and then down. So immersive changes of environment are huge. So I ask people to reevaluate the relationships. The people that are closest to you and the language you guys have in that relationship is paramount. Then where you live, like what do you see when you leave your house? Like, what is the appetite for success in that environment? Are people going to frown at you if you've got a nice, just on the normal superficial things? If you're feeling uncomfortable just having a nice car, which I had that problem when I was in my 20s in that environment. And I thought, oh my God, this is going to sabotage my success. So little things like that make huge differences, your environmental change. Then again, environment is, are you talking to the right people? I've changed my circle so many times that now if I'm not talking in billions, it doesn't feel normal. Like I would never dream of that if the person growing up would never think I would think this big. But the reason I've got this far is no different. It's nothing magical. It's purely a systemic change in environment. Like you have to change everything inside out. Like your inside changes by what you have around you.
Yeah, and I appreciate that. And I think that I agree with all those things. So I'll use myself as an example. I was always an entrepreneur, full private equity, put all my money in my business. Yeah. And I'm the person that would take really crazy risk when you think about it from the perspective of illiquid asset, total concentration risk, stuck in the deal, like no takeouts, right? That's essentially, if you own a company, it's one stock that you can't sell. You have to go through an investment banking process and you have to find a willing buyer, right?
Yeah.
And so I never really thought about it that way until I had an exit. And then I was like, oh, wow, okay, I'm diversifying this risk in different ways now. But I think that I've made a lot. What I found was interesting was I had never been a big investor. I was always a big entrepreneur. So, and a lot of entrepreneurs are not big investors. They're big entrepreneurs. They're good at building, having all their eggs in one basket and protecting that one basket, but they're not good at having their money work for them outside of that. And so I joined a group, Tiger 21. I don't know if you know that group, but it's an investment group. It's cool. It's international, and I don't know if they're in Monaco, but they're in the UK. There's about 800 members worldwide. Minimum investable net worth of 10, and average is about 100. And there's a bunch of billionaires and stuff in it, but it's all just people come together and they want to invest. Yeah. And so I joined that group, and it was interesting. The minute you're around a bunch of people that are placing a bunch of bets, you're like, oh, you get way more. I got way more. Like I've placed a bunch of bets since then. I could tell you, I could count on one finger how many bets I had placed in the last 10 years outside of my company. One, I invested in like some angel investment deal. Yeah. Since then, I've probably placed 10 bets. So to your point, the environment, who you surround yourself with, what is it? The Jim Rohn quote: "You are the average of the 5 people you spend the most amount of time with." Right. Mm-hmm. So I love that idea. One question I would ask though, and this is where, you know, I still struggle, and I'm curious if you see this with other people, is I still have massive aversion to loss, right? So let's use Daniel Kahneman, you know, Kahneman Tversky, you know, their whole thing around why we make the decisions we make. Have you heard about this, the Undoing Project?
I'm going to look them up. Daniel.
Oh yeah, they won a Nobel Prize in economics for the study they did. And so you probably have heard of it, but I'll give you the cheat sheet on it. So basically, they asked a bunch of people. They said, if I flip a coin, right, and it hit heads is you win $1,000, tails is you win 0, or I don't flip it at all and I'll give you $500.
Yeah.
Okay. So basically, like 88% of the people took the $500, right?
Yeah, I get it.
It's the sure thing, right? Yeah. And so they flipped it, and this is the proof. What they were trying to prove was that people don't make decisions at all based off of logic, only based off emotion. And they said, "I'm going to flip a coin.
Yeah,
heads you lose $1,000, tails you lose nothing, or I don't flip it at all and you lose a guaranteed $500." 88% of the people flipped the coin because they did the opposite of because so the proof essentially, and they won a Nobel Prize for this, was that our fear of loss far supersedes our interest in winning. And so, so for me, I find that I fit that mold. Like, and if you look at like Warren Buffett, he's like, rule number 1 investing, don't lose any money, right? Like
I agree.
How do you approach that when you're coaching people from a trading standpoint?
Okay, so I mean, I agree that a loss is nobody wants to lose, and I even put it on my social media just a couple of days ago that I don't want people to lose. So let's remember that. Okay, something I haven't mentioned is in property, and the reason why I was so good, I don't like losing money either. No one does. How I managed to have so much upside is because I use other people's money. So if I was doing a bridging finance remortgage on my own name, etc., I own the whole 100% asset, but I use other leverage components to get there. So even in trading, so when I agree that your first, and I've never wanted to be my investment life was secondary. So I'm an entrepreneur first. That's how I see myself. I'm someone who enjoys creating money actually from nothing. That's the beauty, you know? So when you can create a no money down business, that suddenly is like no debt. I've never had any business loans, any lending or any source, but I've managed to create businesses from zero and are profitable, you know, because I'm very good at revenue models and business models. But the financial aspect is, I believe that all business owners should do what you said at most a week at, which is make their liquid cash work harder than in a bank. Most of them, I don't know, either they leave it in the bank and it's obviously depreciating, or they put everything in illiquid assets. So if you are desperate for money, as you know, in private equity, if you want immediate liquidity,
you don't have it.
You're cutting like at least 20% of your capital, right? So you're going for a big hit on your potential upside. So I like to have both in my life. So I'm actually the safest. You know, being good at financial trading doesn't mean I like to take risks. In fact, that I literally don't want people to take risks. I want them to know what they're doing. Their risk management has to be, you know, they understand the risk they take before each position in the market. If they don't feel comfortable with it, they need to tone it down. And I have something called the rolling risk management. It's the best. I've studied every hedge fund I came across in my life, and I made it better. It's foolproof. With trading errors, it's 100% guaranteed you won't lose any more than what you've designed to go out for in a 6-month period, 1 year period. So I'm so safe. That's why I feel so confident, because if I didn't have that stability of knowing what the downside is, you're not an investor, you're a gambler. That's how I see
Yeah, well, that's why I always say, I always tell them, like, look, there's investing, there's speculation. Just to be honest with yourself as to what you're doing, right? Like
100%.
I invested in an angel investment deal. I knew that was a speculative bet because there's pretty much a 50% chance of it going to zero, right?
Yeah.
That's speculation. That's not, now the upside could be really good, but anything with a high risk of loss is speculation more than like. That's the way I look at it, at least.
For sure, but even then you were still aware, so you weren't gambling. You were like, okay, I'm making this investment and it could all go, or I could have a great upside. That's still intelligent investing rather than, most people, the worst type of investors or people who call themselves traders, they only focus on the upside. They have no understanding of the downside. And that's where I coach them. I make them understand that downside is real and you need to manage that. You manage the risk and the rest is a bonus, that one.
So when you're working with these folks, and I have a twin brother, and he's actually he's a trader, so he trades pretty actively now, and we talk about this, and he's self-taught, but which is interesting, and we'll see how he's had a good run, and I'm always like, all right, man, as long as you have a good run for a really long period of time, then that means it's real. If you don't, that means you got lucky. But one of the things that we talk about is when he's wrong, he has to get out of his positions. He has to take the loss. What do you feel about that?
Oh yeah, I mean, okay. When we take a trade, so when I say we, I teach it the way I trade, right? So if I'm taking a position in the market, I know exactly what the downside is, and I know where I'm projected to go. So how many pips in the market? I know the scenarios. If this happens, I will come out. And it's like I have a journal system where I say, I'm going to stay in this trade if this, and I have a projected 1 day or 3 day. If I'm doing a short-term trade, it's 1 or 3 days. But we're talking at least 120 to 220 ticks. We're not going for 20 pips here and there. We're going for a solid. And if I do long-term, I'm doing 650 to 2,000. And that could be over a 4 or 5 month period, even up to 12 months, depending on the market and the asset class. So I know whether I'm in a short-term trade, a long-term, or a medium. And I have 7 different strategies I use, and that's it. That's all you need in life. Like I could trade for the rest of my life on just one financial asset class, which is a currency, with these strategies, because I have my risk management in place. Plus I know that I have my exits here. And yes, if a trade does not respect what I thought it would do, it's high probability. I'm a mathematician underneath all of this. I was a further maths nerd. So it's high probability. If the probability goes off, then yeah, we're falling into the, this is probably not going to work category. Let's take it out. I have no remorse because the loss in that trade was already emotionally dealt with. So
got it.
And you can't lose any more than what you've kind of said okay with. You have to be okay with your trade. That means the full loss or partial loss, and everything's good after that. So
do you use fundamental and technical analysis when you're making trades? So you're looking at the fundamentals. You're like, okay, I have an idea about this that I think should happen in the short, near, mid, or long term, and the chart says X, Y, and Z. So I'm going to go into the trade.
So in a currency market, you'll be surprised how much is, again, on your trading style. So your short-term trades, the fundamentals, you're only looking at anything that's happening right now or the day before and see whether it's sentiment underlying. Because remember that when the markets just had an announcement, like Joe Biden said about your taxes, the other day, right?
Right.
That's going to create sentiment. So no strategy is going to respect the market, while everyone's emotional. So traders are going to get emotional. They're going to react. No strategy will work when human emotion is massively at play. When you take away, and it's a normal day. So let's just say a typical scenario of COVID was announced, the whole global shutdown happened. The whole month or 2 week period of sentiment, pure sentiment, it calms down after 2 weeks if you have a massive global announcement. But things like what Biden's saying will last about a day or two, depends on what the follow-up will be, or even any US elections, etc., or UK, any government announcements, you take them with a pinch of salt. But if I'm taking a short-term trade, I will be very stupid to take a trade just after that announcement, because who knows if my system's going to work when a bit of sentiment in the market. So yeah, you've got to play both very cleverly. With stocks, it depends on whether you're a long-term hold or not. For example, crypto is at a very nice position for entry. I'm very excited about this industry, and I'm waiting for further drawdowns for other, for the whole market before I enter more heavily. I love, as an investor, I take away the noise. So I don't listen to forums, chats, speculation. I go in as a raw price action trader. So price action is the candlestick movements and the movement on the chart. And every asset class, stocks, currency, crypto, they all have that fundamental built in to a certain extent. But, the 9/11 events, that's never built in. So you've got to have an eye on both sides. But
right.
You've got to be really confident in your execution. And that usually comes from keeping it really simple and staying away from the noise, because everyone's got an opinion. It's just like,
and they're usually wrong. So let me ask you, you just brought something up. It's funny. I just saw that Bitcoin took a 20% hit or whatever. What price point do you like to start buying into crypto, or what price point do you think is like, that's where it's going to head to? Because I think one of the big risks with crypto right now is you have not had massive government regulation of it. And I think that regulation is going to create a lot of price compression. Yeah. And because it's not going to go to, maybe it will go to 100,000 or 300 or $1 million a coin, who knows? Yeah. But there has not been a factoring, and it was a $10,000 a coin, a year ago. Right now it went up to $62,000 a coin. So when you look at crypto, what price point do you like it at right now?
I mean, I would love to have it. I wish I invested in May. I didn't, I didn't go heavy last year. Sorry. Like when it was.
Yeah. Me too.
So, a good investor will always want to invest in, like, when the time was. Hindsight is always going to make you feel like you've missed out. So for me, I just look at the price action, and yes, I do agree. Government action will be very interesting, but don't forget that Apple's got BitPay in there, and there's far too much involvement from the big banks that I don't feel that crypto is going to disappear, or Bitcoin is. I definitely
no. I don't think so. I don't think it's going away. But it had such a run up because of this like FOMO, right?
Yeah, for sure. Yeah.
So that doesn't make sense necessarily either.
I think it's crazy. It's the fastest growing asset class in history. You hit $1 trillion way too fast. I mean, it just shows you what kind of world we live in, where money is being printed left, right, and center, and there is just far too much in circulation. I'm not complaining. I'm just observing. Sure. However, I do think people like Elon Musk have caused a lot of it. As soon as he announced that he put 8% of Tesla cash into Bitcoin, and the other institutions had gone in, BlackRock had gone in last year. So it's the big institutions around the world that are forever driving it. If you get obsessed with Bitcoin and you see that a lot of the big institutions have taken them off the actual exchanges, so they're keeping hold of it. They want to drive they want to keep it forever. And I will never put more than probably kind of like the Tesla 5 to 8%. I will never put more than 5 to 8% of my cash in a speculative move like that. I still believe that crypto is a bit of a speculation. Like, I wouldn't put my hard-earned cash from currency trading into Bitcoin. I would never transfer 100% to Bitcoin.
I was like, maybe I'll put like 1% in, or 2%. To your point, I actually look at it as like a store of capital, right? So it's alternative to gold.
The truth is, we still don't know. We have no control on the market. It's the only market I've seen in my life that has the fluctuations it does. It makes me nervous if I put more than 5% of my cash in there. Everyone loves the upside, but no one really wants to admit that their downside is not attractive.
Well, yeah, it went from 20,000 a coin to 3,000 a coin 4 years ago, and it's funny, as you probably see this all the time. People always tell you about their wins. What is it? Success has many fathers, and failure is an orphan. Right? I don't hear. And my brother's a great example. He tells me about every good trade he does. He doesn't tell me about the trades where he got his ass kicked.
Exactly. Yeah. And they're the ones that are the most important. They're the ones who reveal so much about your character. I only ask my mentee, like anyone I trade, mentor in trading, we focus on the losses, because we want to improve the way that occurred. Like, we don't want to fall into that emotional trap that caused it, or we need to understand the pattern of thoughts that got us to putting that trade in, or holding on to a bad trade. A lot of people do that. They know it's bad, but they can't bear to get out,
Yeah. And hope is not a strategy.
No, it's not. It's a fool's game. So, totally. I'm like Warren Buffett in the sense that, investing should be, you don't predict the market. You're a fool to say you know what's going to happen. Same with Bitcoin. I don't know what's going to happen. I just love the potential upside opportunity, and therefore, but I know it's speculation. Even for me, I would not call it a solid strategy. I'm not into staking. I'm not into leverage trading, because if you've got a lot of money, unless you put in cash that you really don't give a damn about, then I'll try everything, But I put in cash that is genuinely good. I mean, I don't really play with little money anymore. So I respect it. Remember, I came from nothing. So I still respect cash. And yeah, so I'll never do the stupid stuff anymore. But I've got my fingers burnt in the past, in my 20s. Right. So I think I've matured. If that hasn't taught me something, then I don't know what else would.
For sure. I want to move over to, and so, obviously we've gotten to talk a lot about all this great stuff with the trading that you do and the mentoring you do. I want to move, and we're probably nearing the end of the show here, but I didn't want to miss this opportunity to talk about you getting into private equity, because it's something I'm pretty passionate about right now, is doing private equity. So have you made any acquisitions yet, or how are you doing with that?
Okay, so private equity was actually the third option in our billionaire project. So I'll be honest, I did the Oxford University private equity program just to literally make sure I understood everything that was going on, because I was more about IPOs and I'm a financial trader. So I just see instant liquidity, and that was my only thing in life. So private equity is probably going to be, real estate has always been a private equity. So the acquisitions we've made right now are more in the UK on property purchases and big, developments there, not in the ESG space. So I'll be honest, ESG is, we're going to look at that now. So I've got a 1.3 billion book from Credit Suisse that I've got at my disposal to use for ESG. Most banks only ever do private equity investments. They have a capital call for 5 years, etc. I'm happy with that, but I want to see, I only will do what the investors are happy with. So if this investor's only done private equity, for sure, we'll do an ESG project with private equity built in. I love it. But the first one we've done so far this year has been UK real estate. Now we're looking at education platforms. We're looking at, well, this one is probably going to be more IPO, but the solar energy area, etc. But yeah, there's a lot of talks of different sectors in healthcare, we've had blockchain build technology. They help Pfizer and AstraZeneca with their bio data, etc. I have an expert in that field. It's not my expertise, but I just have to check if that project is falling into the ESG investment. So yeah, private equity is going to be a big player for sure, because the big banks love it, and that's why.
So when in your bio it said that you've set up an asset management fund. How much assets do you guys have under management right now? So
we've got 400 million under management.
Oh wow.
400 million, and it's growing. That was our first deal, So, and I've got a book from just one person in my network. 1.3 billion is AUM coming my way. So I think over the next 18 months, if it doesn't hit $1 billion, I'll be surprised, because 400 was our first.
So the 400 million, is that through private, like family office, or is it institutional capital?
One individual, which is the shocking thing, like this is the network. Yeah, it's crazy. It's a billion.
Well, that's how it goes. It's harder to get 400,000 than it is to get 400 million.
Yeah, and honestly, it wasn't even my personal client. It was it's the peak performance, like the network I've built over the years. It was that managing director's client that's followed them for 35 years in the banking world, and they will do whatever that person says. Hey, but the project makes sense, the numbers stack. They know that I've got the property expertise, so yeah, he was willing to put that much in.
Nice.
Over a period, we're not going to use it in one go. We have to be strategic with it, but that's what's under management.
What type of deal size are you guys looking for?
Honestly, I just want $1 billion exit on everything we do. So initial companies that come in, they have to be making 1 million EBITDA. So small scale. I like the underdog entrepreneur angle. So for the smaller companies that wouldn't get investment banking, backing, etc., 1 million EBITDA, we can scale you. You have to be, they have to be locked out for 5 years. So this founder has to still stay with us for 5 years, because they're the ones who created that magic to date. And I want them to carry out and implement the actual investment strategy. That's it. So it is hard to qualify them. A lot of people are very startup, but just remember, 1 million EBITDA means that you've got a bit of, I'm not looking at VC level. I'm looking more growth capital,
Right.
So that private equity scale, it's VC's very early stage. That's risky, that's too risky for me and my investors, because they are coming in from private banking backgrounds and they're over 60. They want to be safe. We're not giving anyone a risky investment. We're going really safe. These guys have a track record of a 1 million EBITDA, and we have audited records. That's safe. Even at this level, we're playing it safe. We're not
on those types. So on those types of deals, and it's funny. I was talking. I have these friends that were investment bankers in Canada. There's a CPP, which is a Canadian pension fund, and they left that. They started a search fund, and they went and bought poultry companies, right? And they did a roll up of poultry companies. I actually coach them now. But yeah, they're smart guys. And I ran a 9-figure company. So, and I built it from the ground up. So I can go into any company and scale it like crazy. And so
we need you on the board. We will probably get. I love people like you. Honestly, they're huge. So very valuable people on the board.
I would love to talk to you about that. But the reason I brought it up though was that we were talking because I said, I exited my last company, and I was thinking, and I'm like, maybe I'll buy. I was actually thinking about either doing private equity or doing kind of what you're doing, or maybe buying a company and scaling it again. And so we were talking about deals specifically the size you're talking about, 1 to 2 million EBITDA. Yeah. And I said, well, what's the market? And these are like blue collar manufacturing companies that they're just trying to come in and hit singles, right? We're going to scale it up, get out of it, triple, quadruple the money. He's saying that those are trading right now, and COVID's kind of jacked up the what do you call it? The multiples a little bit. But he was saying that they're trading at around a 3 to 4 multiple for something like that. For you, but you're going high growth, right? These are high growth with $1 million in EBITDA. Are you paying like 10x multiples? What are you guys paying for those types? Like,
honestly, we're going in at a very strategic angle. So ideally the model was we're going to acquire them fully in a roll up. So you mentioned roll up. So this was the initial conversation, and I try it every time. So if anyone's watching this is a conversation I'd have with them as a company owner. I would say, look, come into you get acquired 100% in this SPV. I will be paying, or me and my investors will be paying for everything. Whether we even considered on the back of STS SPACs, because we had the TSX come to me and say, hey, we want you to list on here. And I'm toying with the idea. I don't know if I've made a decision yet, but IPO and SPAC was the first area that we are going to look at. Private equity, number 3. And the initial conversation was that we're going to take you in, we're going to pay for the listing, we'll take 20% equity, and we'll then lend whatever, as long as everything makes sense. On the uplift, we're going to give you 3 times the uplift in shares to liquidate 12 months later. So the lockup made sense. It was performance related and everybody wins type of approach. There would be, there was a niche to it. So after that, that's the initial conversation. But then the asset managers from the banks come in, and their approach is very, old school. We're going to invest 2 million in this one, or 20 million in here, or whatever, based on this much equity. And their equity is quite a lot more conservative. But I'm going to go in with my initial approach, and we do get 20% every time. But whatever, I'll be honest, there's no standard practice in each deal. It'll come, like, for example, I'll give you a latest deal we were looking at. So this is not biotech. He's healthcare with a blockchain built in, and I love that. Anything with blockchain or whatever. His current company was not that good. He had too many shareholders. So what I did, I stripped the asset, which was him and his IP, and I created a brand new company because his expertise is still there. We created the contracts for him that will create revenue. So as long as the revenue is within the first year, $1 million, then we'll put the money in and I'll take 20%. And he was happy with that, So I'm bringing in my negotiation skills that I've always been good at, and tailoring it to each deal. So there isn't anything, and that's probably why I like this project so much, because no deal is the same. I'll be honest.
Yeah, no, that's really it's really, and I appreciate the way it's really creative, strategic capital, if you will. So I've always, even my last deal I did, I came in, my partners and I brought in money, built up our division, and then we ended up merging with the bigger company. And then the founder became the chairman. We became the CEO, but it was totally a creative capital deal.
I think the best business is that way, because you're really listening to what they want and what they want to do. And I actually pay attention to their family life. Like, this guy was having burnout before his before we stepped in. You know, he was like, literally, I'm going to close this thing down. So I'm listening to everything I hear from these founders because they're really valuable to me, and they're going to carry on this as long as they're still passionate about what they do and they want to stick it out, and they're not just doing it for the money, which sounds ridiculous because everyone's going to make money. But if they're looking for an exit, a quick exit, we don't take them. You know,
yeah, that doesn't work, man. Well, Hither, we're near the end of the show. Time flew. So much fun.
Thank you. This is really good. Yeah.
Yeah, no, it's such a pleasure. I wish we had more time. Well, where can people find you? I know you have a lot going on, so where can people connect with you and find you? And we'll get you wrapped up here.
Yeah, thank you. I think the best place where you can hear me with the most up-to-date stuff is Instagram. So it's at Hither Mann. I have got a little blue check. So there are lots of fake profiles with my name, so please don't follow them. But yeah, just follow that one. And I keep up to date with what I do. I kind of share the most obvious stuff that I'm doing on my Instagram story. So it's my go-to. I think that's the best place to connect. Awesome,
guys. We'll put that in the show notes. Check out at Hither Mann with the blue check mark so you don't get any of those spam accounts. And yeah, well, I'm already following you, so I already get to see all your cool stuff. Life in Monaco looks amazing. I can't wait to go.
It's really cool, and everything is going to be like back to normal soon. Like it's pretty normal in Monaco, but I love south of France, Saint-Tropez. Oh my God, I can't wait for that to open up. I think next month is going to do that.
So cool. Yeah, you know, it's funny. I went, you know, I've been to France a couple of times. My friend, she grew up in the south of France, and her parents were American from Indiana and ended up raising their family there. And then she had her birthday party there, and we were in Paris, and I didn't have enough time to go. It was the one time I was going to go to her birthday party, south of France. And I was like, this is going to be, I'll take it off the air, but I should have been more creative about how I got there. Cause it was like I had kids and stuff, taking the trains or commercial flights did not make sense. And I should have probably gone an alternative route, but I didn't, and I missed it. And so I didn't get to go, but I've heard it's amazing. And I heard it's a lot like Napa, California, like wine country and beautiful.
I bet California I haven't been to California. So it's amazing. Like I've been so busy in business and life that I didn't travel. I mean, I traveled a lot to like Bali and that way, but I didn't do enough America. So I think there's beautiful places everywhere. It's like America's got amazing places. So for me, Saint-Tropez, France, South France is just like, I don't feel like I'm missing anything. I can just stay here for now. But I'm sure, you know, ask me that 3 years later, I'm sure I'll change.
Yeah, you go to California, I'll go to the south of France.
Yeah. That's a deal. Yeah, I would definitely want to try it out. Everything looks amazing. There's parts of the world that you have to appreciate, and yeah, I'm going to try as many as possible.
The world's a big place, like that, that's for sure. But man, Hither, thank you so much. So much gratitude having you on the show. This is so much fun.
Thank you.
I learned so much from you. And guys, check her out at Hither Mann on Instagram. You got so many cool things going on. We got to catch up again soon, and to hear how things go for you and all these different projects. But thank you so much. I really appreciate having you today.
Thank you, Darius.
All right, you guys. Thank you so much for a great show this week. We are taking the next week off, but I will see you guys in a couple of weeks. With that said, we love you. Peace out. Greatness Machine forever.